This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. I'm Carol Massar along with Tim Stenovec. This is Bloomberg Businessweek Daily. Let's get to the setup because we've got, the Dow at a record intraday. House lawmakers poised to end this historic shutdown here in the United States, government shutdown. And maybe it would unlock some access to economic data that would be key in shaping the Fed outlook. However,
yes.
Didn't we get a headline on some of that data?
Oh, yeah. The October numbers, we're not going to perhaps ever get them.
Yeah, okay. So that's kind of a bit of a bummer. All right. So
maybe we'll get them.
Perhaps. Welcome to the environment in 2025. We're going to get into that. There's so much going on. We've got an incredible lineup over the next 60 minutes. Bob Michele, Chief Investment Officer, head of the Global Fixed Income Currency and Commodities Group over at JPMorgan Asset Management, tying all the micro and macro together. And then we get reads on the U.S. consumer, Tim.
Yeah, that from Delta Airlines CEO at Bastian. Also, Tricia Tolivar, the CFO over at Cava. She'll be joining us a little later in the hour.
And we're going to talk a little bit about global energy with the CEO of Vista Energy, about Argentina's push to replicate the U.S. shale boom. So there's a lot going on. Let's get you going, though. On the trade, here is Alexis Christoforous in for Charlie Pellet.
Thanks, guys. It's another record day for the Dow Jones Industrial Average, which is now up nearly 400 points at 48,317, being led higher here by shares of United Healthcare and Nike. In the broader market, the S&P 500 is up 8. The NASDAQ trying to climb into the green. So far, no dice. It's down about 65 points. And the Russell 2000 up just fractionally at the moment. We've got Treasury yields slightly lower with the 10-year yield at 4.06%, the 2-year at 3.5%. Gold rallying about 2% now at $42.08 the ounce, but we've got oil slipping. WTI crude down more than 4%. Brent crude off nearly 4%. That's on concerns about oversupply. OPEC says global oil supply will match demand next year, marking a further shift from its earlier projections of a supply deficit. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash.
All right, Alexis, thanks so much. We did see treasuries with yields dropping across the curve on bets that the Fed will have room to cut rates next month, that last meeting of 2025, maybe to help prop up the U.S. jobs market. Traders might get some clues. We've got a lot of central bankers out there speaking. We are curious to see what Bob Michele has to say. He's Chief Investment Officer, head of the Global Fixed Income Currency and Commodities Group over at JPMorgan Asset Management, a certainly well-known voice here across Bloomberg platforms. Joining us in studio, welcome.
Happy to be here.
Well, it's great to have you here. I feel like there's some different views out there, like the tariff angst maybe not completely done. We've got a growing U.S. budget deficit, Bob. We've got a slowing U.S. labor market. How do you see today? Let me throw this in. More Americans falling behind on their car payments. How is the U.S. economy right now? How do you see it?
I think the U.S. economy is just okay. It's not great. I think recession is remote, but it's a little bit squishy. So it feels as though businesses and households are still struggling a little bit with tariffs and the ultimate impact to cost of goods. I think that's a headwind. Certainly the government shutdown hasn't helped with sentiment. And of course, the Fed has highlighted for a while that interest rates are a bit on the restrictive side. And I think all of those things are conspiring to take a little steam out of the economy right now.
The labor market part is what I'm really interested in hearing from you. Absent government data for a couple of months, what's an accurate view of the strength of the labor market right now?
So the government data is one thing, but you and I both work in franchises which have ungodly amounts of data. We use that. We look at the Chase data. We look how the consumer is performing. The consumer looks okay. Deposit balances look okay. We're seeing big ticket purchases starting to tick up a little bit. But of course, all of that is concentrated in the top quintiles of earners. From businesses, our equity and credit analysts talk to literally hundreds of businesses a day. And what we're hearing there is they don't feel an urgency to do any hiring. they're in pause mode headed into year end. And of course, that would weigh on the labor market.
I want to bring into something that, and forgive me if I mispronounce it, Gregory Daco. He's chief economist at EY Parthenon, Daco. And he says the economy remains resilient on the surface, but it's increasingly dependent on three narrow interconnected A pillars: affluent consumers, artificial intelligence-fueled investment, and asset price gains, and talks about how they're connected, right? We know the wealthier consumer has been out there spending. They're responsible for really a big bulk of consumer spending that goes on in the U.S. But if the AI spending boom, Bob, is not, if there ends up being a little bit of a bust, a big bust or something, or we start to talk about, right now we're talking about the spending and on balance sheets and, you know, whether or not we're going to have to kind of replace these items. They're not going to last forever, whether it's chips or what have you. But what if we see those asset prices come down? The affluent consumer doesn't feel so affluent. They stop spending. Does all of this start to come undone?
It could, but I think we have to remember we're a month and a half away from the One Big Beautiful Bill Act hitting. And when you look at the One Big Beautiful Bill Act and think about the tax refunds on tips and overtime and Social Security payments, where are most of those? Those are in the bottom couple quintiles of earners. So you're going to get some relief there. You think about the Genius Act and a lot of things that are happening there, you're going to see some spending there. And the one thing nobody's really talking about right now, which we see on the horizon, is deregulation. It's certainly going to come to financial services. It will likely come to other industries as well.
Well, that makes me think about, and we weren't going to talk about this till a little bit later on, but we do know that President Trump is hosting a little soiree with a bunch of financial executives. Jamie Dimon's going to be there, at least according to reporting or people who have been briefed on the event. Is that what they're going to talk about? The regulatory environment? Have you talked to Jamie about this? But if you were sitting down with the...
When I looked at some of the attendees, I suddenly thought, boy, there's going to be one outspoken bank CEO there.
Rhymes with...
I'm sure they're going to do a lot of listening. I think they're going to be a sounding board for a lot of things, the things that have been mooted in the market recently, $2,000 payments that go out, checks get cut, 50-year mortgages, maybe not, maybe you just take your mortgage with you. I think this is going to be an administration that will bounce things off of them.
Yeah.
I think it will be one that will ask them, what do we need to do to unleash big banking, big business? Are there other things that can be done? And I think there's going to be a group there that will be pretty free-flowing with the information.
For what it's worth, Caroline Leavitt at the White House was asked earlier this afternoon about the 50-year mortgages. She said the administration is seriously looking into 50-year mortgages. I do want to go back to the
Would
AI
you buy? Would you recommend investors buy
a 50-year mortgage?
Wait, which side, Carol, are you talking about? Like someone buying a home?
Become an investment.
I got taught very early there's no such thing as a bad bond, just a bad price. So it depends on where it gets priced and the features in it.
I do want to go back to AI because Carol,
you didn't answer the question.
Carol asked about, hey, no bad bond, just bad price, right? Okay?
It's secured by a home. I would buy it.
Okay.
I absolutely would buy it.
We were talking about one side of what ends up happening with AI and if there is potentially some sort of unraveling given or bust. What about the other side? What about the side where everything actually exceeds expectations, where productivity increases as a result of this technology, and then potentially we see widespread job losses? Are we looking at the right parts of this right now? Are we understanding where we could see productivity gains?
I think you have to look at it all. And I think you have to realize that unlike the dot-com bubble where nobody envisioned the iPhone 10 years later or whatever, and there are companies without revenue, without even really business models that were worth billions of dollars, you actually have deep-pocketed companies that are either developing or investing in it. And it is everywhere. We see it in JPMorgan, how it's being used everywhere to create efficiencies. You talk to any company now, and they talk about how they operate in real time. They can shift their supply chain. So think about the logistics and shipping. All of that can have some sort of AI overlay to it. How they manage their pricing, that could have an AI overlay to it. And those are two big things that have come out of tariff policy. And already we're seeing AI introduced there.
So what could possibly go wrong here in all that's coming at us?
I always go back to William McChesney Martin, whose comment was,
I kind of wish Tom was here because he would love that.
our job is to take away the punch bowl. And the reality is there's a lot of money sloshing around in the system. Policymakers on the monetary side and the fiscal side are working hand in hand. You may even see the regulatory side as part of that accommodation coming from everywhere. But we're not looking at the next Paul Volcker being appointed to the Federal Reserve. We're looking at people who fundamentally believe that lower interest rates create a level of economic activity which will generate higher productivity. So for me, as long as that's in place, I'm not really worried. I would get worried when you have to take the punch bowl away. Growth and inflation pressures are so high, you have to start draining liquidity from the system.
But you don't think we're there?
No, I don't think we're going to be there anytime next year.
Well, that brings us to one last question. We got the news today that Fed Bank of Atlanta President Raphael Bostic announced plans to retire at the end of his current term in February. We are seeing a changing composition, Bob, of the Fed, new names, more to come. Kevin Hassan telling Carlyle Groups and host of peer-to-peer conversations, David Rubenstein, that if President Trump asks, Hassan will do it. He also said he had high regard for Fed Chair Jay Powell. This changing, though, composition of the Fed, good, bad? How does that help hurt in getting policy?
I think it's reality. I think you have to accept that these are political appointees. And believe me, I know that they go into rooms, they work with their staffs, they try to make the very best decisions. But they come with different core fundamental views. And one could be the William McChesney Martin, Paul Volcker kind of view, which is there's too much money sloshing around the system, get it out of here before we have an inflation problem, a Hans Tietmeyer kind of central banker. And others come thinking, no, we need to be able to create liquidity, make mortgages and housing affordable. That will create economic activity, which gets taxed. There will be productivity that comes out of AI, which will offset that headwind. It's an exciting time to be in the markets. And it's an exciting time to see the way policy makers are shifting around.
Come back soon?
Always happy to be invited.
Okay, we will definitely invite you. Bob Michael, thank you so much. Really appreciate it. Chief Investment Officer, head of the Global Fixed Income Currency and Commodities Group over at JPMorgan Asset Management. All right, now we're going to talk a little bit about the global energy economy, Tim.
Yeah, this on a day when the International Energy Agency further tempered its stance on an imminent peak in oil demand, reinstating a scenario in which global consumption keeps growing to the middle of the century. We head on to the Bloomberg News Bureau in Buenos Aires, Argentina, and to the founder, chairman, and CEO of the close to $5.2 billion market cap exploration and production company, Vista Energy. Miguel Galuccio joins us. The company's ADRs trade in the U.S. under the ticker VIST, down about 8% so far this year. Welcome. Good to have you on the program today. I'm curious about this company being one of the few options for investors wanting a piece of the world's next shale boom in Argentina. Today, you told them about your plans for the next 5 years. Walk us through some of the highlights here and what the exposure for investors would be.
Hi, team. Thank you very much for having me. Yes, let me give you a context about Vista. Vista was a company that was listed in 2018 in the New York Stock Exchange at $9 per share. We're producing around $200 million EBITDA and producing 20,000 barrels per day. Today, we announced a plan where we're going to take the company to $2.8 billion in 2028 and producing 180,000 barrels of oil per day. So we are super excited about the next phase of growth of Vista.
One of the things I want to ask you, Miguel, is President Milei. He is somewhat of a global star, a Wall Street darling. He's already helped Argentina's shale industry. They've done deregulation, like getting rid of some price caps on crude there. So resounding, election for him, or I should say endorsement of him, what we saw in the midterm. What else would you like he and his administration to do?
Yeah, Carol. So yes, as you pointed out, I mean, stabilizing the macroeconomy, having access to the capital market is good news for Argentina. More of a country that have a lot of resources to be produced and where capital is one of the main elements that are important to continue accelerating the growth of Vaca Muerta. What else we can do? I think there's one thing that we can do is to become more competitive. We are today, we have a rock that is fantastic. We have super productivities. You have seen the numbers of Vista. We have margins of EBITDA around 65%. Nevertheless, the cost of a well in Argentina is still around 30 to 35% higher than the cost of a well in US. So being more competitive, that means deregulating the market, having less tax, better law, more flexibility, definitely could help for us to be more competitive. For Argentina, more competitive means more investment, more production, more export, more proceed for the country, more job for our people.
On the capital side of this, could the company now come to market with more global bonds or maybe even a follow-on equity offering? How are you thinking about financing?
Well, we just released a plan that is fully funded. We are in a cycle where we are cash flow positive. We have the inventory of wells to drill. We have the equipment. We have 4 drilling rigs and 2 frac sets. We have the capacity to evacuate. We export around 60% of our production today. In 28, we will export in 75% of the production. Vista is the main exporter of Argentina and the main independent producer of Argentina. So we don't really need to come to the market. But there are several companies from the industry that have come to the market last week due to the result of the election. And it's very positive for the industry that the rest of the industry had access to the market today. It clearly will accelerate the development of Vaca Muerta in Argentina.
So I am also curious, okay, so that would help Vaca Muerta. President Trump, as you know, is certainly an ally of President Milei. Helped him through a bad patch just a few weeks ago with a financial lifeline, right? We've reported that out. Everybody did. I am curious, in what ways do you think Argentina's close diplomatic ties with the United States, really President Trump, will help or impact the shale industry in your country?
Now look at Carol, I mean, everything that helped to stabilize the macroeconomy of Argentina, and as I said before, to gain competitiveness is good for the industry. So if Trump did that, it's good for the industry, it's good for the country. I will not comment politically, I don't have a political view on that subject, but anything that can help Argentina to stabilize the macroeconomy is, for me, is welcome.
Just 30 seconds left. I'm curious where Shale fits into the picture of finally solving Argentina's economic problems. Just 30 seconds.
Very much, Tim. So I came back to the country in 2012. The trade balance of energy was minus $7 billion. We will close this year plus $7 billion. So a swing of $14 billion. And if we continue doing what we're doing, we are aiming in 2030 to have a surplus of $20 billion. This is pretty much what Argentina receives for the exportation of soybean, and we are one of the main exporters on the world. So yeah, it's very important for the country.
So appreciate getting some time with you. Miguel Galuccio, he is the founder, chairman, CEO of Vista Energy, joining us from our Buenos Aires bureau for Bloomberg News. Coming up next, the CFO of Cava.
Christoforous. 2:21 on Wall Street. I'm Alexis Christoforous. The Dow rallying to new heights as Wall Street looks ahead to a potential end to this record-breaking U.S. government shutdown. When the government does finally reopen, a senior White House official says key economic reports, namely the October jobs report and inflation numbers, may never be released. The Dow Jones Industrial Average up 326 points at a record 48,256. The S&P 500 basically flat, but the NASDAQ Composite is down 86 points. We've got a number of financial stocks hitting new 52-week highs today, including Goldman Sachs, Wells Fargo, and Bank of America. The Financial Times is reporting that the EU has launched a new probe into Alphabet's Google for the way it ranks news outlets in its search results. We've got shares of Alphabet down 1.7%. On the flip side, shares of the Swiss sneaker brand On Holding climbing now 19% after the company boosted its sales forecast for the year following better than expected third quarter results. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, great stuff. Alexis, thank you so much. In for Charlie Pellet on this Wednesday. Hey, shares of Cava slightly lower, down about 0.5% in today's session. They are down, though, around 56% year to date. They are also down nearly 70% from an all-time high last December, and nearly 15% of the float is short. Now, keep in mind, the company did report after the close on November 5th. The stock closed down about 2.6% the following day on that news. What the earnings news was? Cava Group cutting its full-year sales growth targets after its foot traffic stalled in the third quarter, and that added to some worrying trends that financially squeezed consumers are foregoing fast casual restaurants. To be fair, we've seen this at some other fast casual restaurants. So back with us in our latest installment of CFO Briefing, Tricia Tolivar. She is the Chief Financial Officer of Cava, joining us from Baton Rouge, Louisiana. She will be featured in an upcoming CFO Briefing newsletter. And then also with us in studio is Nina Trentman, Bloomberg News Senior Editor. She writes the CFO Briefing newsletter, which you can subscribe to and find at bloomberg.com/CFO Briefing. Good to have you both here. Tricia, I want to start with you because we actually saw Citi come out, and Cava and Sweetgreen were put on Citi's 90-day positive catalyst watch. An analyst there noting that sales he expects to improve off lows as the U.S. government likely reopens in the coming weeks. I'd love to start there, and welcome back to Bloomberg. How has the shutdown hurt business, and how does it look from here on out if indeed we see the government start opening?
Hi, Carol. It's good to be with you today. Certainly, as we experienced the shutdown and around the middle of October, around the time when people in the District of Maryland, Virginia stopped receiving their paychecks, we did see a slight step down in spend in those markets. Certainly not anything acute, but certainly an impact that we noticed in the business overall. So as we look forward to hopefully a return to work in the near future, it's likely that it will have a benefit. But really what we're wanting to do more focused is on the long term, and what that means for Cava to be able to provide incredible food, abundant offerings with amazing flavor that make you feel good while you're eating it and after. And we believe that relevance will continue to drive benefit for the business over the long term. The other thing to keep in mind is that we are anniversarying or lapping very strong same restaurant sales in the prior year, fourth quarter, at 21%. And so that is what's influencing our outlook for the rest of the year in 25. And as we go into 2026, looking forward to the culinary offerings that we have that we can bring to our guests every day.
Tricia, thanks for joining us again. Just wondering, in terms of your view of the consumer, we've seen restaurant chains, not just you, but also others, reporting weaker results and cutting forecasts. What's your view of the consumer from here? We've heard a lot about the K-shaped economy, where sort of well-off people are doing well, but the weaker income bands are just spending less. Is that something that you're concerned about?
Certainly, you can see from the high frequency data with credit cards that the consumer is feeling some more pressure, as well as just the consumer sentiment in general. There have been a lot of challenges as the consumers are facing them in the near term. And as we experience those in our business, what we're finding is that consumers continue to lean into our premium items. So our amazing steak and our new chicken shawarma, as well as attaching with incremental items like our fan favorite pita chips. Right now, we've got cinnamon sugar pita chips with a drizzle of honey that's incredibly tasty.
I'm hungry.
As well as our fresh. I know. I had them for lunch today, so they're incredible. But that, as well as our house-made juices. So those are continuing to attach and increase. And also, when you look at our restaurants and at how they're positioned based on median household income in their markets, we're finding that the lower income consumers actually experiencing in those restaurants higher same restaurant sales than the rest of our cohorts of restaurants. So from that standpoint, it's encouraging to see that we are becoming more accessible for the lower income consumer and driving increase in sales in those areas.
How does the weaker results that you reported in the quarter, how does that impact your planning on future growth? Like, I know that you wanted or are planning to open as many restaurants next year, roughly as you opened this year. Is that still the plan?
We do intend to continue to increase the opening of our restaurants with at least 16% growth in restaurants in 2026. This year we'll open at least 68 to 70 restaurants. And what we're seeing is that despite the challenges we see with the consumer today, we're very encouraged about the strength of the business and what we're able to offer. So our new restaurants that are opening or have opened in 2025, those restaurants are delivering average unit volumes above $3 million, which is above our chain average. And that really underscores the power of the brand itself, the excitement around the consumers as we come into new markets and existing markets, and gives us the confidence in our white space opportunities that we will continue to lean into our growth in new restaurants as we move forward.
Certainly new restaurants a big part of CapEx this year and next year, but where else are you investing?
We're always looking for ways to make our operations and our restaurants easier to run for our team members. So some of the investments we're making are in equipment in the restaurants to streamline operations, like our kitchen display systems, which works with our digital ordering systems on the back of the house, which supplies our digital customers. Those tools allow our operators and team members to fill orders more easily and create a higher level of accuracy. We've also equipped our restaurants with turbo chef ovens. Many of our restaurants didn't have them, and in this year we made those investments. It streamlines cook times, creates better quality and efficiency, and simplifies operations for the team members overall. Our view at Cava is a happy team member equates to a happy guest and a happy P&L, and we're always looking for ways to reinvest in the business to drive that.
Let's talk P&L, and I'm just curious about, in your earnings, tariffs talked about how they have hit your or you guys talked about how tariffs have hit your restaurant level profitability through higher food, beverage, and packaging costs. Is that just the new reality and new normal that will stay with us for longer or perhaps forever? I'm just curious what your read on that. And then how does it play into pricing? Because I think you guys were still looking to limit price hikes now and also into 2026, but is that maybe up in the air?
Yeah, so tariffs have certainly been an evolving and an ever-changing area. Luckily, one of our values is to act with agility, so our team members on the supply chain side have done an incredible job in minimizing that impact as much as possible. But the tariffs did have about a 20 basis impact on our food, beverage, and packaging costs in the quarter, and I expect those to continue into 2026 as well. And what we've done from a pricing perspective is really try to minimize that impact. We took no incremental price in 2025 related to those incremental costs that we were incurring. We didn't believe we should put that on our guests and wanted to absorb that and try to continue to elevate our value proposition, which is quite high amongst our peers. And then as we think about it going into 2026, we're also going to be very mindful about price increases and anticipate very modest increases. Since the end of 2019 to the end of the third quarter, we've only raised price less than 10% below CPI or inflation and less than half of many of our industry peers. And that's something that we feel very strongly about and a trend we expect to continue to do despite the pressures we may experience on our input cost side.
Tricia, so I get that. So it sounds like you are being incredibly and have been mindful in terms of price increases on consumers. Having said that, if no price increases, but you did say that the tariffs have hit you guys on a couple different levels, does that mean margins take a hit? Or where do you squeeze costs out? Is it workers? Is it the supply chain? Where do you squeeze price, some of the cost of this out?
So certainly in 25, we took no incremental price related to tariffs. And in 26, there'll be modest menu price increases. That helps minimize any inflation that we experience on the labor side as well as the input cost side. And then there are other opportunities from an efficiency standpoint as we grow and scale that we will continue to deploy to minimize the impact on the P&L overall.
Tricia, your share price is down quite a bit this year. I'm just wondering, from a CFO perspective, is there room for shareholder returns? Like, are you thinking about buybacks? What's the measure to get your share price back up?
Well, what we've always said since the beginning is this is a journey and a long-term journey overall. And so while the share price can go up and down, we want to remain focused on the business over the long term and what's that what that we can do to make sure that we drive that. And we stay focused on our strategy and committed to that. We'll always explore opportunities to strengthen and maximize those returns. And right now, we're just going to continue to remain focused on the strategy we have at hand, and that is opening and expanding the Mediterranean way across the country and running great restaurants every location, every shift, and deepening personal relationships with our guests with a high-performing team. You
have stores in more than a dozen states in D.C., so this question is dependent on geography, but in general, the labor market right now, our team has reported on Walgreens cutting pay for hourly workers after its private equity buyout. Is the labor market better for hiring people right now?
You know, we're in 28 states in the District of Columbia across the country, and the labor market is one that we keep a very close eye on. And our focus is making sure that we're paying a very fair wage in every market across the country. So I work closely with our operations and people and culture team on a quarterly basis to evaluate our wages to make sure that we're in the top quartile of pay so that we don't have as much pressure on wage and can bring on high quality team members that can lead the future growth of our business overall.
All right, next time you have to send us some pita chips. I'm just going to say, am I allowed to say that?
We can go get them.
We could. Why didn't we do that?
Better. Go get them, and next time.
I'm just kidding. You're right. We could just scoot out here on but is it 3rd or Lexington?
There are a lot of stores. I'm looking at the website right now. There are a lot of stores in New York.
Around us. Hey, listen, Tricia.
708 3rd. Check it out.
She knows. Tricia, thank you so much. Tricia Tolivar back with us, Chief Financial Officer of Cava, joining us from Baton Rouge, Louisiana. And of course, our thanks always to Nina Trentman, Bloomberg News Senior Editor. She writes the CFO Briefing newsletter. You can subscribe to it at Bloomberg.com/CFO Briefing, and a new one comes out every Sunday.
Also, don't forget to check out our Bloomberg Chief Future Officer series. The next episode, that is coming out next week. It features the CFO of Standard Chartered Bank, Diego DeGiorgi. That's next Wednesday, 9:30 p.m. Wall Street time. You can see all previous episodes right now on YouTube and at Bloomberg.com.
All right, coming up, everybody, we're going to get into, we're going to talk to actually another member of the C-suite. I'm really curious to see, Tim, if GLP-1 drugs are somehow impacting the business of his next guest.
It's not food.
It's not food.
It's not food.
It's not food, but it's a device where sometimes either being overweight can cause a medical situation, and you use his product.
That's a deep tease.
How's that for being
that's a deep
cagey
tease. That's where we're going. In the meantime, taking a look at markets right now. The S&P 500, it's in the red, but pretty much flat. The Dow up 0.6%. The NASDAQ composite down about 0.5 percentage point.
Yeah. And there's a clear winner when it comes to the number one gainer in the S&P 500 and the NASDAQ 100. We're talking about AMD. So that is certainly on my watch list as we are just about an hour and a half away from the closing bell. You are listening and watching Bloomberg Businessweek Daily. I'm Carol Massar, along with Tim Stenovec, and this is Bloomberg.
2:40 on Wall Street. I'm Alexis Christoforous. Still a mixed market with the Dow in record territory, but the broader market is struggling to come back into the green. We still have optimism here that this longest government shutdown in U.S. history will end later tonight. The Dow up 353 points at a record 48,281. The S&P 500 inching up 2, but the NASDAQ composite down 88 points. Reuters is reporting that NVIDIA denies plans to invest $1 billion in the northern Mexico state of Nuevo León. That's just hours after that state governor touted the firm's plans to build a data center there. Shares of NVIDIA lower for the second straight day, down about 0.5%. But we've got NVIDIA's rival, Advanced Micro Devices, up big for a second straight day, now gaining nearly 7% after CEO Lisa Su told a company event that the AI chip maker will see more than 35% year-over-year revenue growth for the next 3 to 5 years. And BlackRock Coffee Bar recorded higher sales and a narrower loss in the third quarter in its first quarterly report. As a public company, still shares of BlackRock Coffee Bar down 0.6%. And perhaps in a sign of our times, more Americans than ever are falling behind on their car payments. Fitch Ratings says the share of subprime borrowers at least 60 days past due on their auto loans is now at the highest level on record, dating back 30 years. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back over to Carol and Tim.
All right, Alexis, thanks so much. Just crossing the Bloomberg terminal, a few headlines and a right through, courtesy of the Wall Street Journal, folks. The Federal Trade Commission investigating whether proxy advisory firm Institutional Shareholder Services, ISS, and Glass Lewis violated antitrust laws through their business of guiding shareholder votes, Tim, on contentious topics.
Yeah, once again, proxy advisors ISS and Glass Lewis are facing antitrust probes. This, according to the Wall Street Journal.
I will say the probe is focused on the firm's competitive practices and how they steer clients on issues such as climate and social-related shareholder proposals. So check it out, the story, the right through, fully in the Wall Street Journal.
Okay, well, Carol gave lots of clues. Perhaps you were able to piece things together. We're talking about Inspire Medical System. Shares of the company under pressure, down 50% so far this year. 11% of the float has been shorted. However, that said, the stock soared as much as 21% the most intraday, going back to August of 2024, after the medical device maker gave its quarterly update. That was earlier this month. It also boosted its full-year profit guidance following better than expected results in the third quarter. Piper Sandler views the print as, quote, a step in the right direction. For more on the business and outlook back with us is Tim Herbert, founder, chairman, and CEO of Inspire Medical Systems. He joins us from Florida. I want to start with the question that Carol teased just a few minutes ago, Tim, and that's the effect of GLP-1s on your business. As we know, it can lead to weight loss. It does lead to weight loss. That's what studies have shown. And there are a lot of like knock-on and second-order effects of this. Does it affect your business?
Yeah, well, thank you first for having us back. It's great to be with you today, and beautiful day. GLP-1s provide an opportunity for patients. You mentioned before patients can lose weight. There are certain patients that have a high enough weight that they're unable to benefit from Inspire. So having those patients lose weight certainly does create an opportunity that they can then qualify for Inspire. There's also some concerns that patients may want to try a GLP-1 before they go to surgery. We think that's fine. We also think that it just creates an opportunity, and many will circle back around to be able to be treated with Inspire. And we conducted a survey of over 200 sleep physicians to really kind of gauge how GLP-1s are changing the sleep industry. And we found that it's becoming more prescriptive on which patients will be treated with the GLP-1, which patients will be able to qualify going on to Inspire. So we monitor it very closely, but we respect patients if they want to try a GLP-1 first. But we do think just the overall increase in the diagnostic rate of sleep apnea with the awareness from the GLP-1s will be beneficial to everybody in the sleep market.
But are there some patients who may have sleep apnea and then after using GLP-1s or going on GLP-1s, they may no longer have sleep apnea?
That's what their clinical data showed. Typically, the patients who go on a GLP-1 have a higher BMI, body mass index, even that over 35. And our average BMI of the patients that we treat tend to be at 29. So it's a different population set, but hopefully the patients with the higher BMIs can lose weight and therefore come into our indication and thereby be treated with Inspire. So we monitor it very closely, and I think it's in the long run going to be a very positive for Inspire.
Yeah, because I just want to go back to, I think it was back in, I don't want to say even last year, that we saw Eli Lilly's weight loss drug, Zepbound, improved sleep-related breathing problems in some study. So we are seeing progress on this. I mean, listen, we kid with our team that covers it, and, that basically Madison Muller, who covers the GLP-1, and her team, that this feels like it's the drug that's going to treat so much or fix so much because it's just shown overweight or being overweight. And we know it's not easy for some, that leads to so many different health problems. So do you see it as being, though, a longer term risk to your business? Or do you see that there's still, I don't know, what market size that will still need your device?
Yeah, no, I think long term it's going to be a benefit because we tend to treat patients with a more moderate body mass index or with a body mass index between 29 to 30 to 32. Those patients that were in the clinical study tended to have a much higher body mass index, even approaching that of 40. And that makes a big difference. So those are patients that really need to address their weight because weight is associated with moderate and severe sleep apnea. So we are very related. And what's interesting about the GLP-1s, they're so new to the sleep market with the indication just being awarded earlier this year that the sleep physicians are just learning how to adopt and how to deal and prescribe the GLP-1s and Do they count on the family practice physicians to manage it? So we monitor it very closely, but we think that more and more people are coming in to get a GLP-1 and being diagnosed with moderate to severe sleep apnea. It's important that those patients receive treatment, and certainly Inspire is an opportunity for them.
Tim, where does it fit in though? Like, I know folks that have apnea, sleep apnea machines, and that is something that doesn't require any kind of surgery, and you just sleep with it every night. What's the market for that, which seems to be a pretty big market, versus your market, and what determines a patient that can do it without surgery using those, devices when they go to sleep at night or take a nap or whatever, versus those who should seek surgery?
Well, sure. And I think that those machines called the CPAP, or continuous positive airway pressure, have been available for quite some time.
Right.
And what's key to it, though, is you do wear an apparatus, a mask, or a device that blows constant pressure, and that's what kind of holds your airway open. And many patients just are unable to benefit from that. Up to 50% of the patients, once they receive a device like that, just are not able to use it long term. Yet the importance of treating moderate to severe sleep apnea and the risks of comorbidities associated with untreated disease is really significant. So these patients need to find alternatives, if not just for the quality of life. We all know that if we didn't get a good night's sleep, how you feel the next day. Well, people with moderate to severe sleep apnea, they don't sleep every night, and they need to find resolution to take care of their sleep apnea. So hopefully the GLP-1s can help patients lose weight. Hopefully they can stay on the CPAP machine, but Inspire is there to help those patients who are non-compliant to CPAP that need the alternative therapy. And we've been showing very good progress over the years since approval back in 2014.
I want to make sure I understand who this is for. We just have 30 seconds left. Is it only for people where other treatments don't necessarily work? Or if you're using a CPAP right now, this could be an alternative treatment?
This could be an alternative treatment. We do expect that patients would try CPAP because that is the gold standard, but we also know that up to 50% of the people won't be able to benefit from CPAP. And so we make sure that our awareness campaigns are there to educate the patients and the physicians, the availability of Inspire, and our growth has shown that to be pretty successful.
Hey, Tim, forgive me, 10 seconds. It is covered by insurance, or it depends? Just quickly.
We are covered by all insurance companies. I think we have over 300 million covered lives in the United States, including Medicare, as far as the Veterans Affairs and military hospitals. So we have very broad coverage across the United States.
All right. So appreciate getting some time with you once again. Tim Herbert, founder, chairman, and CEO of Inspire Medical Systems. When we come back, stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, coming up on the last hour of trading here on this Wednesday, November 12th. Quick check on the trade, and we're definitely off our best levels of the session. So what does that mean? S&P, call it little changed, fractionally, percentage-wise. It is pretty much unchanged. We're just up about 2 points on the S&P. NASDAQ 100 down about 0.2%, down 45 points. It's the Dow that we've seen another record intraday, up 351 points, up 0.7%. It's interesting to see the move that we've seen in the Dow, and I know we kind of brush it off often.
Because it's a price-weighted index.
No,
so
I get it.
A lot of people are, and that's why we saw it higher yesterday. NVIDIA's not part of it. NVIDIA took a big tumble.
Right.
We saw that affect the...
But it's interesting, right? I don't know.
The market cap weighted index.
I remember when the Dow mattered.
Well, in terms of what's actually moving in the S&P 500 right now, energy down 1.5%, communication services and consumer discretionary are all lower. Healthcare, materials, financials are leading the way higher.
You know what also is moving in today's trade? Airlines. If I look at the S&P 500 airlines composite, all 9 names in that index are higher. If you look at Delta, it's up about 4.5%. The company did say mandated flight cuts that snarled U.S. air travel caused a significant financial impact, though the carrier expects a return to normal during the typically bustling Thanksgiving holiday. Yay! If the government shutdown ends this week. Delta's CEO, Bastian, spoke to Bloomberg's Lisa Abramowicz, one of the hosts of Bloomberg Surveillance on Bloomberg TV. And here's what they had to say. They covered a lot of ground.
I'm glad we got to our 100th centennial and so proud of our people. First U.S. airline to reach 100 years of age. But yeah, we're hoping that the vote comes back tonight and we get everybody paid, most importantly, all those essential workers, controllers, the security agents, the regulators, everyone in the system. They do such amazing work. They're heroes doing this for a month and a half without pay. Showing up every day, and we appreciate them. So I'm happy about that as well.
How long will it take before we don't see any delays or any unexpected delays tied to the shutdown?
I think it'll happen pretty quickly. I think once people start getting paid, and I know Secretary Duffy is committed to getting those paychecks out right away. So over the next couple of days, I think you'll see things starting to turn to normal. Yesterday was actually a pretty good day. The weekend was tough. We had weather. We had a lot of staff shortages in many of the ATC towers that caused delays and cancellations. Looking ahead, weather holds, and I think the outlook for the weather is not too bad. It should be by Friday. I think we should be back pretty close to normal.
Do you think Thanksgiving will also be back to normal?
Thanksgiving will be great.
Okay.
Listen, we know the importance of Christmas and Thanksgiving and the holidays. That's our Super Bowl. And that's what we rehearse and plan all year long. We're going to be in really good shape for that.
Have you seen anybody make any cancellations or not make plans? Yeah. Anything that sort of highlights the concern around some of the delays that we've seen from the government shutdown?
Yeah, and it's understandable. We've seen some reduction in bookings, not material, but maybe 5 to 10% from where we would normally be. One of the frustrating things to me is that heading into this period, when they decided on Thursday to start canceling flights, we had tremendous momentum. The revenue-based business going double digits, premium categories all going double digits, if not more. We're going really strong, and then you get into this situation. All those travelers say, "Well, maybe I'll wait and see what's going to happen here." So we did see some refunds. We did see some. We were very flexible in refunds. If people wanted their money back, we were happy to. Not happy to, but we wanted to make sure they were being taken care of.
All right, that, of course, was Delta's Chief Executive Officer, Ed Bastian, speaking to Bloomberg's Lisa Abramowicz earlier on Bloomberg Television. You can catch the whole interview, find it at Bloomberg.com and also on the Bloomberg terminal. I'm just going to point out, S&P Supercomposite Airline Index, Tim, again, 9 names. All of them are higher. UAL's up about 5%. Delta's up about 4.5%. SkyWest is up more than 4%. So across the board.
Yeah, optimism that we will see some of the issues that have been facing airlines over the last week or so.
However,
look, Ed Bastian spoke to some of the consumer changes that he's seen over this period of time. We are certainly examples of that. We are headed to Boston. It's kind of like the same amount of time flying versus driving, but we didn't even consider flying this time, or flying versus train rather. But we had a hard time getting train reservations because so many people, we talked to our travel department and they're like, oh yeah, trains sold out as a result of people not flying, at least on these, like the Acela route right now, DC, New York, and Boston. Yeah,
kind of wild, and I guess to be expected, as you said, Tim. And I think you and I went back and forth. Do we book a plane? Do we book a train as a backup? And
do you an automobile? Which actually could be an option.
We actually thought about, do we just book an Uber and just kind of go there because the prices start to be comparable? But kind of crazy. I think we're all looking forward to things kind of getting back to normal. You got home okay last week from our trip from Denver, but I had a 2-hour delay, so I'll be happy to have it all go back to normal.
The shutdowns, they always come to a head at the airports, don't they?
They do.
That's what it seems like.
That's when we start to feel it.
Hey, speaking of feeling it, we're trying to feel out this economy. We got a great conversation coming up in our 3 o'clock hour. Peter Atwater is going to be joining us. He is adjunct lecturer of economics at the College of William and Mary. He's the president of Financial Insights. He's somebody who's certainly very familiar to our audience. And then Connor Sen is going to be joining us just a little bit later as well. He's got a really interesting affordability column that talks about the success of Democrats last week and really the challenges of the economy moving forward.
Yeah, I feel like this is all front and center. Folks, we've got a market where the S&P is slightly lower, little changed. Dow intraday, new record, and NASDAQ 100 down about 60. If you're watching on TV, the close coming your way. Tim and I continue on radio.